Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. Joining us for this segment, we have Joyce, Managing Director at Nasdaq's Market Intelligence Desk, for an update on levels to watch in the Nasdaq 100 following a strong quarter out of Meta, which of course is boosting tech stocks. Brian, it's great to see you as always, and really, I mean, we're at the highs of the day. Nasdaq 100 up nearly 2.5%.
Yeah, you know, there's been a lot of turmoil over the last 2 months, particularly with the financial sector. But earnings season is underway, and earnings overall for the S&P 500 companies have come in better. And so, as you noted, Meta today had better earnings as well. And so, you know, we're still seeing that leadership this year, you know, from the Nasdaq 100 versus the other majors in the United States.
Well, let's take a look at a chart of the Nasdaq 100, because you and I were commenting off camera that it looks like there could potentially be another breakout here.
Yeah, absolutely. So, you know, we had that nice 3-week move following the lows made from in mid-March from the banking turmoil, and then for the prior 3 or 4 weeks, we've been in this sideways consolidation, but we've been consolidating above those prior February highs. So we've been holding that expected support level, and we're still in that sideways range. But this week, you know, we're 1 day away from making the weekly close, and we're closing at the top of the weekly range right now, and it's very close to that prior high, which was made back in late March. So 3 weeks of sideways consolidation, and looking right now like we're moving to the upside. There's been a lot of talk that the move and the bullishness in the marketplace has been driven by the mega cap names, and they have been providing, you know, good leadership and strong outperformance. But if we look at the Nasdaq equal weight index, it hasn't yet broken out, but we still have what appears to me to look that looks like a constructive consolidating bottoming pattern. So it looks like to me an inverse head and shoulders here, with the initial low back in June of 22, the lower low in October, and then the lows in December were very similar to those lows back in June. And since then, we've had this trend of higher lows. We haven't yet broken above the top of that range, which is up around 62.24, but we're just a few percentage points away. And so if we have that breakout above this level, if we do in the coming weeks, then you'd really see that breadth begin starting to improve.
Well, I mean, of course, next week, too, we have a Fed meeting. Apple is reporting, right?
Yep.
I think it feels like everything's sort of in the sideways trading action prior to the big prints that we got this week. I'm curious to see how the market could potentially react next week, because it seemed as if those earnings that came out really drove the direction, and fortunately it was to the upside. But again, we have Apple next week, and you have a Fed meeting.
Yeah, and you know, if you looked at what FactSet was putting out last month, they were saying regarding the S&P 500, they do a lot of analysis regarding the members of that index, all large cap stocks. You know, if you took a bottoms up aggregated total of the price targets for all the members, you would get to roughly 4,600 on the S&P, a little bit more than that. So that's certainly higher from here, about 10% higher from here. Even the financials, their aggregated price target was about 12% higher, 15% higher from where it was just a couple weeks ago in that S&P 500 financials index. So, you know, there's certainly potential for the move to go higher. We know sentiment is still very bearish. The Commitment of Traders report was showing, I believe, the highest net short position in the futures market for the S&P 500 going back to 2011. So near term to intermediate term, you could certainly make a case that the move is higher in the marketplace, particularly if that sentiment is so negative. You know, everyone's looking at the yield curves, which are deeply inverted. The 10s-3s only went inverted in October, so it hasn't even been 12 months. It's only been 12, 13 months for the 10s-2 spread that's been inverted since last April of 22.
What are traders thinking in terms of a near-term rate hike?
I think the market, last I looked, was around 75 basis points. That's fluid, but roughly around 75 basis points. The Fed will hike another 75%.
Right.
Probability
like 75 basis points.
That they would that the Fed will hike 25 basis points. So, you know, we could certainly see another hike at the next meeting, and I think the expectation then is that, you know, maybe a pause would be appropriate.
All right. Appreciate the insight as always, Brian. Thanks for joining us on Trade Talks, and thanks for joining me. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.